For us to continue to give you this valuable content, please like, share, and subscribe. Welcome to the fourth section, the fourth video of the 1040 series. In this video, the topic will be income. Income. Generally, you must report all income except income that is exempt from tax by law. The forgiveness of a PPP loan creates tax-exempt income, so although you do not need to report the income from the forgiveness of your PPP loan on Form 1040 or 1040-SR, you do need to report certain information related to your PPP loan. Foreign source income. You must report unearned income, such as interest, dividends, pensions, and tips, from sources outside the United States, unless exempt by law or a tax treaty. You must also report earned income if you worked abroad. Foreign retirement plans. If you were a beneficiary of a foreign retirement plan, you may have to report the undistributed income earned in your plan. However, if you were the beneficiary of a Canadian registered plan, you can elect to defer undistributed income. Foreign accounts and trusts. You must complete Part 3 of Schedule B if you had a foreign account, or received a distribution from, or were a grantor of, or a transferor to a foreign trust. Foreign financial assets. If you had foreign financial assets in the tax year, you may have to file Form 8938. Chapter 11 Bankruptcy cases. If you are a debtor in a Chapter 11 bankruptcy case, income taxable to the bankruptcy estate and reported on the estate's income tax return, it would include all earnings, including income from property. Because this income is taxable to the estate, don't include this income on your own individual income tax return. The only exception is for purposes of figuring your self-employment tax. You must also include a statement that indicates tax withholdings. Community property states include Arizona, California, Idaho, Louisiana, Nevada, New Mexico, Texas, Washington, and Wisconsin. You must follow state law to determine community and/or separate income, attaching Form 8958. Nevada, Washington, and California domestic partners. A registered domestic partner in Nevada, Washington, or California must generally report half the combined community income of the individual and their domestic partner, attaching Form 8958. You can round off cents to whole dollars on your return and schedules. If you do round to whole dollars, you must round all amounts. To round, drop amounts under 50 cents and increase amounts from 50 to 99 cents to the next dollar. Line A is the total amount of income from W-2 forms for you and your spouse combined, if married. If you earned wages while you were an inmate in a penal institution, you will now report these amounts on a Schedule 1. If you received a pension or annuity from a non-qualified deferred compensation plan or a non-governmental section plan, and it was reported in Box 1 of Form W-2, do not include this amount on wages. This amount is reported on a Schedule 1. Line 1B. Enter the total of your wages received as a household employee that was not reported on a W-2 form. An employer isn't required to provide a Form W-2 to you if they paid you wages of less than $2,400 in the tax year. Line 1C. Tip income not reported on Line 1A. Caution. Do not report tip income and allocated tips shown in Box 8 on your W-2. Allocated tips aren't included as income in Box 1, it is reported on a Schedule 2. Line 1D. Medicaid waiver payments, taxable and non-taxable, that were not reported on the W-2, will be reported on a Schedule 1. You can choose to include non-taxable payments as earned income for purposes of claiming a credit or other tax benefit. Line 1E. Taxable dependent care benefits is reported on Form 2441. Dependent care benefits should be shown in Box 10 of your W-2. Line 1F. Employer-provided adoption benefits is reported on Form 8839. Benefits is shown in Box 12 of your W-2, with Code T. You can exclude part or all of the benefits, including adoption with special needs, as long as finalized. Line 1G. Uncollected Social Security and Medicare tax on wages is reported on Form 8919. Line 1H. Other earned income. If you received scholarship or fellowship grants that were not reported on the W-2, you will now report these amounts on a Schedule 1. Line 1I. Non-taxable combat pay. You can elect to include your non-taxable combat pay in your earned income. If you are a statutory employee, Box 13 of your W-2 should be checked and reported on a Schedule C. This includes full-time life insurance salespeople, certain agents, commission drivers, certain traveling salespeople, and certain homeworkers. Are you missing or have an incorrect W-2? Your employer is required to provide or send your W-2 to you no later than January 31st, following the end of the tax year. Even if you do not get a W-2, you must still report your earnings. Line 2A. If receive tax-exempt interest from municipal bonds, you would receive a 1099 INT or a 1099 OID. Do not include interest on your IRA, health savings, Archer, Medicare Advantage, or Coverdell education. Tax-exempt interest is reported on a Schedule B. Line 2B. When filing taxable interest income from Forms 1099 INT or 1099 OID, attach a Schedule B if the total is over $1,500 or any of the other conditions apply to you. Line 3A. Qualified dividends on Line 3A are also included in the ordinary dividend total required to be shown on Line 3B. Qualified dividends are eligible for a lower tax rate, which differs from ordinary income.
Hi everybody, and welcome to Rynance. In today's video, we're going to talk about dividends. I'll cover some common questions like, what are dividends? Why do some companies pay dividends while others don't? And why do some investors prefer dividends in their investments? Alright, let's jump right into it and tackle the question, what are dividends? Dividends are a payment made from a company to the shareholder of that company as a reward for owning their stock. Dividends are paid out in cash, so the investor can choose what he or she may want to do with them. You could, for example, reinvest the dividends back into the company they came from, invest those dividends into another company, or even just spend them on everyday goods and services that you may want. Dividends are usually paid out on a monthly or quarterly basis, and that'll depend on which company in particular that you're investing in. So why do companies want to do this then? Well, if you're the owner of a profitable business, you'd have four main choices for what to do with your cash. You could reinvest the money back into the business to expand, just hold on to the cash and wait for the next good opportunity to come up, buy back your own shares in the market. This is known as a stock buyback, and I'll cover that more in depth in another video. Or you could pay dividends. Dividends get paid out to the investors of the company. So, in general, investors like dividends because they are generating returns on their capital with each dividend payment. It builds trust between the company and their investors because investors can see firsthand that they are making money over time with their investment. In the market, it is also seen as a show of financial strength when a company can afford to pay regular dividends over many years. So why might an investor prefer a stock that pays dividends over another stock that doesn't pay dividends? For one, dividends create a reliable source of return on their capital without any effort from the investor at all. What this means is that if you buy a dividend-paying stock and hold it for some period of time, you know that your investment will pay you every month or quarter, depending on the company, without the need for you to sell your stock. This can create a consistent stream of cash flow for investors that can be especially useful for those that require income for their everyday expenses. Additionally, if an investor chooses to use those dividend payments to reinvest back into the company or another dividend-paying company, this can create compound interest for the investor on their capital. This can be very powerful over time in that dividends allow you to buy more stock, which in turn pays you more dividends, which buys you even more stock, and so on. Lastly, there can be certain tax implications which make dividends more or less preferable when compared to other forms of income, such as capital gains. This will be specific to your income situation and the country you live in, so I would do my own research beforehand to understand the specific tax implications. Now that we have covered the basics of dividends, I'd like to take you through a quick example of what your return may look like if you invest in a dividend-paying company. Let's imagine you invest in this fictional company, Ryan's Burger Shack, and buy 10 shares. These shares cost $50 a share for a total investment of $500. Ryan's Burger Shack pays dividends of $1 per share per year and will make payments every quarter. Since the payments are quarterly, this means that the $1 dividend will be split into 4 payments of 25 cents each for each share you own. Since we have 10 shares, we will be paid $2.50 each quarter, or $10 per year. I'll draw out a timeline here, and let's say we hold the shares for 5 years, and then sell those shares at the same price we bought them at for $50 a share. So we have spent $500 initially to buy the shares, collected $50 in dividend payments over the 5 years, and then sold those shares for $500. Now, our original $500 investment has grown into $550 for a total return of $50 or 10%. As I wrap this up, you may be asking yourself, where can I find dividend information? There are tons of websites and apps out there that provide information about stocks, including dividend information. You can use the Stocks app that comes preloaded on your phone, or get the Yahoo Finance app. Yahoo Finance also has a website if you would prefer that, and it's a great place to start. This is not endorsed by Yahoo in any way, by the way, it's just a personal favorite of mine. All you need to do is search for the company you're interested in, and you'll be able to find their specific dividend information. Alternatively, you can also go to the website of the company that you're seeking information about and find the Investor Relations section. Here, they usually provide many metrics like how much the dividend is, the exact payment schedule, and how long they've been paying dividends for. Thanks for watching today. If you found this video helpful, hit the like button. Leave me a comment if you still have some questions, and don't forget to subscribe for more videos. See you in the next one. Bye.
Line 3B. Ordinary dividends is reported on a 1099 DIV. Attach a Schedule B if the total is over $1,500 or you received, as a nominee, ordinary dividends that actually belong to someone else. Non-dividend distributions. You must report these distributions as capital gains on Form 8949. Do not report them as dividends. Report as income on a Schedule 1. Lines 4A and 4B. IRA distributions should be received on Form 1099-R, showing the total amount of any distribution from your IRA before income tax or other deductions were withheld. Lines 5A and 5B. Pensions and annuities should be received on a Form 1099-R, showing the total amount of your pension and annuity payments before income tax or other deductions were withheld. Fully taxable pensions and annuities. Your payments are fully taxable if you didn't contribute to the cost of your pension or annuity, or you got your entire cost back tax-free before the end of the tax year. Partially taxable pensions and annuities. If your Form 1099-R doesn't show the taxable amount, you must use the general rule. You can ask the IRS to figure the taxable part for you for a $1,000 fee. Insurance premiums for retired public safety officers. If you are a eligible retired public safety officer, you can exclude from income the smaller of the amount of the premiums, or $3,000, on line 5A and 5B. Your disability pension on line 1H. Payments when you are disabled. If you receive payments from a retirement or profit-sharing plan that does not provide for disability retirement, do not treat those payments as disability payments. The payments must be reported as a pension or annuity. Understanding the simplified method will be explained in detail in a future video. Starting date. Your annuity starting date is the later of the first day of the first period for which you received a payment, or the date the plan's obligations became fixed. Age, or combined ages, at annuity starting date. If you are the retiree, use your age on the annuity starting date. If you are the survivor of a retiree, use the retiree's age on their annuity starting date. Cost. Your cost is generally your net investment in the plan as of the annuity starting date. It doesn't include pre-tax contributions. Your net investment may be shown on Form 1099-R. Rollovers. Generally, a rollover is a tax-free distribution of cash or other assets from one retirement plan that is contributed to another plan within 60 days of receiving the distribution. Lump sum distributions. If you received a lump sum distribution from a profit-sharing or retirement plan, it will be reported on a 1099-R in the total distribution box. You may be using a Schedule 2 and Form 4972. Lines 6A and 6B, Social Security Benefits. You will receive a Form SSA 1099 showing total of benefits paid. Railroad retirement benefits treated as Social Security will be on a Form RRB 1099. You file Form 2555, 4563, or 8815, or you exclude employer-provided adoption benefits or income from sources within Puerto Rico. Disability payments. Don't include in your income any disability payments, including Social Security Disability Insurance, SSDI, you received for injuries incurred as a direct result of a terrorist attack against the U.S. or its allies. Accrued leave payment. If you retire on disability, any lump sum payment you receive for accrued annual leave is a salary payment. The payment is not a disability payment. Included in your income in the tax year you receive it. Line 6C. Use this to elect the lump sum election method for your benefits. If any of your benefits are taxable for that tax year, and they include a lump sum benefit payment that was for an earlier year, you may be able to reduce the taxable amount. Capital gain or loss. If you sold a capital asset, such as a stock or bond, you must complete and attach Form 8949 and a Schedule D form. Details about this topic will be in a later video.